I'm gonna try and break down the interest rate for you quickly and easily. For any of you who are about to take on a mortgage, this is something you might want to know in advance. I'm Karriann Graf. Watch this video so that you can get the best deal on that new loan. Rising mortgage rates have been the trend so far this year. Most economists and housing market analysis believe mortgage rates will gradually drift higher as the year progresses, but there was not a clear consensus on how and when. The Federal Reserve is expected to raise short-term interest rates and has already begun to reduce its purchase of mortgage-backed securities. These policy changes are likely to help rates increase this year, which is the prediction of most experts. According to Joel Kahn at the Mortgage Bankers Association, 30 fixed mortgage rates will hit nearly 4%. There are several factors behind this prediction, but one of the biggest reasons is just the growth that we're expecting for the economy as a whole. Although supply chain issues have caused some disruption, that is expected only to delay some economic progress. Instead of getting that robust growth in the second half of 2021, it seems like a lot of it was pushed into the first quarter of 2022. Higher interest rates are likely to make refinancing less attractive option for homeowners, but the demand among buyers is expected to stay high. Hey, tell me in the comments below, did you refinance before the rates went up? I sure did. I got lucky. We have a lot of younger people in the population entering or who are already at the prime ownership age. Even as home builders deal with supply chain issues, the number of homes on the market is forecast to increase. Having more homes for sale should slow the pace of the price appreciation. Real estate markets are local, so what home buyers deal with from one area to the next can vary drastically. Overall, buyers should be prepared for a competitive home buying process, maybe a little less aggressive than in 2021. With mortgage rates on the rise, Chief Economics of Realtor.com recommends factoring potential rate increases into your home buying budget. You want to consider what mortgage rates are now and what they may be into the next quarter. As rates increase, what you can borrow to buy a home will decrease. If you anticipate this, you won't need to completely redo your home buying budget or reorganize your home search if it takes longer than anticipated to buy your home and rates have gone up. First-time home buyers especially may need to heed this advice. It might take you a bit longer to find your first home. Home buyers can anticipate healthy competition in the housing market. Be prepared to move quickly to lock in your mortgage rate before it increases when you find the home that you love. But the other side of this is that rising rates could cool down the market somewhat. If you end up missing the boat and you have to wait until later in the year when mortgage rates are higher, maybe you'll have the benefit of a little more selection. At the end of the day, buying a home should be a long-term decision. You can't lose as long as you're staying in the house for a long time because home values normally always go up. Before the rates rise too much, you might be interested in a cash-out refinance, which allows you to pay off high-interest debt or affordably finance your home renovations. Increased home values may even give you a chance to get rid of the private mortgage insurance sooner than expected. The most important step you can take to ensure you're getting the absolute best mortgage rate is to shop around. Mortgage rates aren't set by a single entity and vary from lender to lender. One study found that the difference between the highest and the lowest mortgage rates offered among the lenders was about 0.75%. A good rule of thumb is it could benefit you if you can refinance into a rate of at least 0.75% to 1% lower than your current rate. Whether you choose to refinance or not depends much more than just the refinance rate on your new loan. Consider your financial goals and how refinancing may or may not help you reach those goals. When you refinance, there are upfront fees that can be 3 to 6% of the loan balance. That's thousands of dollars for a typical home loan. Even if you secure a lower rate, the fees you pay may outweigh any potential savings. Start by getting pre-approved for a mortgage and determining your home buying budget. This will help you narrow down the types of properties that you can afford and the home and where you want to live. Working with the right real estate agent and lender is part of setting yourself up for success when buying a home. Find an agent you connect with who also has the experience of working in the area you want to live. Real estate markets can be hyper local, and an agent who works in that area can give you a leg up on the competition when it comes to putting in an offer that conforms to the local norms. When choosing a lender, find somebody who has experience dealing with the types of home loans you're considering. If you're interested in purchasing a home in Key West, I would love to help with your real estate needs. Contact us and let's discuss your goals, what you're looking for in your next home. I'm Karriann Graf. To watch more videos about Key West, be sure to subscribe. And in the meantime, click these videos right here. People love what we do, and we do what we love. And until next time, bye for now.